The Hedgeless Horseman here. It's January the 6th, 2023. In this video, I'll talk a bit about alpha exploration and, cover some thoughts I have of what makes a good exploration story and a good company, and what I would like to see for in a hodl case, let's say, and how to actually, how do you take advantage of the fact that a company has a superior management team. First of all, it's listed on the TSXV, ticker symbol Alex. They are working in Eritrea, and they have a bunch of targets. I mean, I wrote this company up, I don't remember, there was at least several months ago, I think. We know this is the only, as far as I know, African play that Crescat Capital is invested in. Main attraction to me is the people involved. I mean, you can go over the resumes yourself. Uh, Basically, a bunch of mine finders, discoverers, mine finders, uh, mine builders. I mean, President CEO of Sunrich Gold Corp on the Asmara project. Sunrich discovered the 80 million ton Embadero copper zinc gold VMS. Goldfields, Arizona Star, Bima Gold. Alistair Smith is really an ace. Discoveries, Australia 3, Guinea 1, Eritrea, where they are operating right now, 4. Mine developments, 6. In Australia, Guinea 1, Tanzania 3, Eritrea 4. And you can look up the other people as well. So, I mean, first of all, which should be common sense, but I don't think always is common sense. If you have a superiors, like top 1% in terms of management teams, explorers, if it's an exploration story, how do you take advantage of the alpha embedded in a superior management team? That is obviously time. Uh, Time is the friend of the good management team, and especially a great management team. Time is the enemy of a bad management team. If you give your money to a bad management team, uh, sooner or later they will have destroyed value. It's like, think of it like cryptos, for example. They can go up a lot at any given point in time, but give 9,000 cryptos a long enough timeline, and almost everyone will have gone to zero. Take a great investment or a great case with great management team, the longer time you give them, the higher the chances that they will have created some significant value, because that's what they do. But if you give, let's say you give a poor management team 1 day to run a company and a great management team 1 day to run a company, odds are that if you hold it either case for a day, there will be absolutely no change in value creation. But give those companies 2 years, my bet is that the bad management team will have destroyed value and the good management team will have uh, created value. Same thing as, you have Michael Jordan. If you give him 1 second to play in a game, he won't change the outcome of that game, really. And I would probably have as much impact as Michael Jordan if we both had a chance to play for 1 second, but give us a full game, I would have uh, probably created a lot of problems, or hopefully they would not even pass me. But then the fact that they would play with one less uh, member of the squad out on the field or court, as it's called in basketball, I guess. Uh, but the ones who had Michael Jordan for an entire game, he would greatly increase the odds of that team winning. So that's why I've been meaning to, I guess, talk more about the fact that to me it makes absolutely no. I mean, I see almost everyone is a trader. Doesn't make any sense to me, especially if it's a good case. If it's an, let's say, a cheap, undervalued case or whatever, the whole play is to wait until it is not undervalued anymore. I don't, I mean, that's the whole attraction with an undervalued story. I don't get why people would short term trade undervalued stories, let's say. Because anything can happen in the short time period. The whole idea is that you wait until the price to value gap closes. And the same goes for seriously successful value creators. In the short term, a stock can go anywhere. In a very small time frame, a good management team can't create much value. But time is the only way to play that. Anyway, so that was the whole point really about this case. And I'm not too deep into Africa plays, but if you have a team like this, which have basically uh, found major discoveries, put them in production, and also done it in Africa and even in Eritrea where they are operating. It's like if you substituted alpha exploration, identical story, identical targets, whatever, whatever, with the average junior mining team, this wouldn't be in my opinion, a good case. It would look totally different. I mean, imagine if I ran this company. Almost regardless of how much money you gave me, I probably wouldn't be able to do much with their, despite there being a lot of good targets. At least it would take a lot of time to put together an actually good team, etc. So that is again the main attraction. Give these guys time, and pretty much that is what has started to play out. They are now up to one could say at least three discovery stories, one VMS, one orogenic gold, and this has actually turned out to be now I would say it's the flagship target. Anagulu was the first flagship target where they had intercepts like this, and we'll go over some of that, what is happening there, let's say. Uh, so, what is exciting about alpha exploration? First of all, I would say hands down that the Berna prospect is the main attraction right now. Why? Because they've had some really good intercepts after just drilling a bit over 5,000 meters. That is not a lot of drilling. Even if there is a good system or deposit, etc., in any place, in any given place, the odds of you hitting the best zones, let's say there's a small area where there's some good mineralization and other stuff is pretty bad. So meaning yes, there is some stuff there, but like what are the odds that you're actually going to hit the sweet spot immediately? Not high, not high at all. And that goes back to the Kennerland study, which is very good, in my opinion, to evaluate. It's like I said before, in the case of Great Bear and all of those success stories, you don't need to be in before a discovery hole is made. That's when you take, like, especially if it's a maiden drill campaign, let's say there's a less than a 5% chance of success. And contrary to what people believe to be the case, which is that, okay, if they make a discovery, I'm going to get a 10 bagger. That might be true. But as we've seen a bunch of times, that doesn't happen from the discovery hole. After discovery hole, a company might go up 30 to 100%, sometimes even more. But that's not a 10 bagger, obviously. Let's say a company actually makes a discovery. Let's say they're valued at 30, the discovery hole, let's say they're valued at 30 million. The discovery hole has them up 100%, and you're like, I missed the boat. I should have been in earlier. No, typically it makes much more sense from a risk reward perspective to get in after 100% pop after discovery hole than actually be in before the discovery hole. Sure, you didn't get the 100%, but you only see what happened. And let's say 19 times out of 20, if you're in pre-discovery play, 19 times out of 20, they will end up not making a discovery hole. So you lose money on 19 out of 20 cases. And the one time out of 20 they actually make a discovery hole, you'll only get, let's say, 100% return. That does not pay for 19 other stories that gets cut in half. Not even close to it. But that's for some reason, and I started, I mean, I'm guilty of that as well. I thought to have good returns in exploration, I thought you needed to be in before the discovery hole. And today I'm pretty much almost in no pre-discovery play. There are some exceptions, and they need to be exceptional. It's like Inflection Resources is one of few pre-discovery plays I'm actually in, because they have a superb team. They really know how to. I mean, they have a bunch of ex-BHP and I think Rio Tinto guys, etc. And they have a huge target portfolio. So there I'm diversified to the upside. It's not, one target needs to deliver and maybe it has a 5% chance of success. But if you have 20 targets and there's an average 5% chance of success on any target, base case probabilities would be that after you drill 20 targets, you will have one discovery. And if it's starting off from a very small market cap, for example, then simply based on math, the risk reward is actually pretty great, because you have 20 single target juniors in one company. And it's run by some of the best exploration geologists in the business. This is more de-risked than that, because they've already made discovery holes, which could end up being, let's say, foretelling of a major discovery. Because just look at this slide here. This is a 6-kilometer trend, 2-kilometer wide. This is the soil anomalies they've found so far. And they have done soil samples to the north. They have also done soil samples to the south. So there's nothing real that cuts this off other than lack of sampling, which is of course very good. And we don't know, maybe this river actually, destroys some of the anomalies that would otherwise be there if it were not for this river. So who knows, this might connect. What is important is, again, these are the trench samples, and it's even more interesting when you look at actual drill results. So they've drilled just a tad over 5,000 meters of grassroots exploration. Meaning they didn't, when they started off, they don't know where the best parts are. They haven't drilled 100,000 meters and, can easily identify where the actual good parts of a potential ore body is. No, I wouldn't say, I mean, it's not totally blind, because they have soil samples and they have, some trenches, but still hit results like this, and note how far apart these are. I mean, northeast area, that's way up here, and obviously you can see there's, 2 kilometers more of soil samples this way, and they're testing if this continues even further out, obviously. 16 meters of 14 gram per ton. That's way above 100 gram meters. And if we go back to the Kennerland study, the majority of 2 million ounce AU deposits have an initial gram ton meter intercepts of over 50. And the majority of 5 million ounce, what ends up being over 5 million ounce, have an initial gram meter intercepts of above 134. And to capture the majority of the 2 million ounce deposit, discovery intersect should have over 5 meters of mineralized rock. To capture the majority of 5 million ounce deposit, discovery intersect should have 10 meters of mineralized rock. Here you have, for example, this is 16 meters. This is not 100 gram meter, but this is 10 meters. This is well, these are a bit lower grade, so they don't qualify for any of those. But on the whole, this target has already overshot what you would want to see in terms of there's being a good chance of a major discovery, or potential of a major discovery. If a company drills less than 4,000 meters and hits a 75 gram meter intersect, this could be very significant. They are slightly above 5,000 meters. Okay, if a company drills 10,000 meters on an initial program and does not intersect a 100 gram meter intersect, they should downgrade the target. Alpha has way above 75 within a bit over 5,000 meters. They have drilled half of 10,000, already have over 100 gram meters, so it's not downgraded there. In terms of gram meter intersect initial drilling return, no, that wasn't. I think there was a. Well, we can just look at this one. Key metrics for recognition of a discovery based on, okay, these are Canadian deposits, but anyway, okay, if there's a shot at a 5 million ounce AU deposit, initial drill program produced a drill intersect of 134 gram meters, check. Length of discovery drill hole intersects over 10 meter, check. So based on this is lode gold Canadian or orogenic Canadian. Still, this again, what does this suggest? Either you are incredibly lucky to have such good intercepts so early on, or it's a very robust system. If it was not a robust system, let's say only this piece here had high grade gold, and there's about anything other than that's like, you know, sub-economic. You would literally have to hit the exact spot in that case. You had to be incredibly lucky. But what if this is actually a very robust system? So you could have drilled here or here or here or here or here. That greatly increases the odds that you will find something of significance with very limited drilling. And they've hit that here, 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 sure. I mean, this is still over 50 gram meters. That's Celebration Hill. This was one of the best intercepts. Here you have up to 20 meters of 7.70 grams per ton, 50 meters of almost 6, 18 meters of almost, 5, let's say. And that's here. And down here you have, you know, okay, not, you know, absurd, but let's say pretty much here you have very good initial results, here you have very good initial results, here you have very good initial results. So think about, again, the scale here. And in light of what they found, Kenorland has found to be, you know, a significant tell whether a system could be above 2 million ounces or even above 5 million ounces. And Alpha Exploration has checked those boxes because they have had over 100 gram meter intercepts of way less than 10,000 meters. And again, just looking at the footprint, this would suggest that this could be a major orogenic gold system. It might be complex, it might take some time to set up, but just imagine if they've had these kinds of results from less than 5,000 meters, given the lack of information when they started drilling. They're going to do more soil sampling, they have trenched as well, they're going to do geophysics, etc. So they're going to know more about this system. They're going to know more about the potential of this system. They have more data in hand. So how many news releases can you fit in this picture, do you think? If they drill a bit over 5,000 meters, let's say semi-blind, and have highlight holes like this, what do you think the news flow would look like if they drill 15,000 meters with even better information? Odds are that these are not one-offs. 20 meters of 7 grams, 60 meters of 14, 10 of 15.05, 15.06. No, if I were to front run the next 20 news releases, if they drill just from a Berna alone, I would think there would be many news releases with very good holes. What? How is the market gonna respond? Would they respond favorably to them? I would think so. There's still a lot, obviously, to figure out. But to have this much high quality smoke across an area as big as this, where there's a bunch of smoke in terms of soil sample anomalies, this could very well be a major discovery. But of course, like always, this will not jump to being a 5 million ounce deposit in the next month or even in the next year. But in 2 years, this might very well be a major discovery. That might be obvious in 2 years. And if you compare that to the current market cap, 40 million, do you think there's some upside risk there? Do you think there's probable growth here? I think so, based on the Kennerland study, based on balance of probabilities. And if there is, this would be the team basically to find it and to be able to monetize it, because they know very well how you work in Eritrea, and they've sold mines before and proved up mines before and even put mines into production before. They are very competent in all stages of pre-discovery to development and even sale, and in Africa at that, and even in Eritrea on top of that. That is why I think this is a great exploration story for any buy and hold investor. And obviously, time is how you capture the alpha of a good management team. That's the only way. Otherwise, again, to me, it makes absolutely no sense to be a trader, a short-term trader or technical trader in stories like this. Why? Because you're missing the whole point of, a top 1% management team. You could trade Dogecoin instead. The most, or any other thing that's highly volatile where you don't care about fundamentals. But I see people, it's the same, I know I keep harping on about this, but it's the same with Magna Mining. I see people talk about, how they're going to trade, as always, they're going to front run every single dip. They're guessing. I mean, you're missing the whole point. If a story is undervalued, the whole case is to sit in it until it is not undervalued anymore. So if it's 100% undervalued, where that's the actual case, but you try to trade every up and down, you're missing the whole point of it being undervalued. You could trade something that is overvalued in that case. That makes more sense, because if there's no, or fairly valued or whatever, or at least very volatile. But I see that all the time. It doesn't make any sense to me, because you're missing the whole point of why in that case why the case is great. If you were only a trader, why would you care if this was a good management team or not? You would just trade the share price swings and pay no attention to the fact that it's like, yeah, but the trend is probably up because it is a great management team, so that's how we get the that's what the whole case is about. Because every stock goes up and down, but not every stock has a positive expected return over a 1 to 2 year period. Great companies with great management teams have that. That's what sets them apart from the average junior. But you might as well trade. I mean, like Bear Creek Mining or any other trading sardine. That's the stuff I would trade because there's not time is not even your friend in that case. Time is actually your enemy. So you would take your profits and run, etc. But value creators, the whole idea is that they will have created more value the longer time you give them. So the odds of you actually having a return, positive return, increases with time. If you're trading, you're missing that whole point. Maybe you're in a stock for 1 week because you think it's going to go up, etc. I mean, how much value would a great management team have been able to create if you give them 1 week? How many risks are to the upside in that case? Not much. Give them 2 years. A lot of risks to the upside. So you're missing the whole point of alpha in that case. Anyway, uh, so this is why I really like the fact that they are diversified to the upside. They have the Angulo porphyry gold copper discovery as well. They have reinterpreted this with the help of, I think, Richard Silito, uh, which suggests that it's the green rocks here that will be the main focus going forward. And as you can see, this is where they've had their best intercepts to date. But you can see down here is where there's actually a lot more quartzite diorite exposed. So if this turns out to be the case, that this rock unit ought to be the focus here, this story could change a lot for the better. There's no guarantee of that, but again, at 40 million market cap, one major discovery obviously is a company maker. So they have a Berna, which is already has become the main flagship target now for obvious reasons, because this could easily host a major discovery, multi-million ounce gold discovery. Not that it's guaranteed, but what probability is priced in? If this becomes actually a significant discovery, which based on the Kennerland discovery study, this so far the Berna target has checked all those boxes, that yes, this has an above average chance of actually being a major discovery. And they've sold mines for or deposits for a lot of money before. So if a Berna is as good as it looks, that could be a company maker and possibly have investors get a multi-bagger. Who knows, maybe even above a 10-bagger in, if you give them enough time to drill all this out. Because a 10-bagger is not an event. A 10-bagger happens after typically a few years of consecutive 50% runs, let's say. A stock that goes up 50% every 6 months will turn out to be a 10-bagger. A 10-bagger is not an event. It doesn't go straight up to 1000%. And obviously, the better if they keep just creating value. Again, the value creation curve is going to be up. So you're going to get paid to wait until one day, the growth settles down. They can't grow much more, or they drill it out, etc. Then that discovery is mature. But that might be years from now if things go well. So theoretically, if this indeed is a significant discovery, this chart alone might have enough news releases to see alpha exploration go up over the next 3 to 5 years. But if this is a significant discovery and you hold it for 1 month, there's no way that they will have been able to create enough value to have it become a multi-bagger. So again, time is the key here. And this might surprise, because we already know there are pretty good hits here, and that's up here. And you can see it's like there's really just one hole smack in the middle where there's green here. So this might surprise to the upside. And here you can see some copper ppm results. Obviously, there's probably something going on here. The extensive zone of quartzite diorite was sampled with trenching over the entire 1.5 kilometers and has returned anomalous copper. This area is target for further drilling. It has the potential to increase the known mineralization at Anagulu. Is that a certainty? Absolutely not a certainty. But given the amount of torch, this is one of two, so one could say if you just cut it in half, there's like 20 million Canadian priced in for a Berna and for Anagulu respectively. Is that cheap or expensive? I wouldn't call that expensive, again, given the team. They wouldn't bother if they didn't think it was a high priority target, because they have no shortage of prospects. There's prospects all over the place. They are prioritizing where they think they have the best chance of a significant discovery. And right now, Berna has taken the top spot on that department. Then they have the Tollerjimja copper zinc gold VMS discovery. No barn burners yet, but there's smoke here, and this is a long trend. And this is still very early stage. There is something kicking around here. What are the chances that this is a major VMS discovery? I don't know. Again, what is priced in is more important. If there's a 5% chance, coupled with the other two targets, maybe Alpha Exploration has very good risk-adjusted expected return. Then they have the Cosolda gold project with very long soil anomalies for gold. They've only really drilled Cosolda main, I think. So again, you pretty much have at least 4 early stage exploration stories in one company. And these are the next steps. This is a slide I really like. Again, our job is to front run the 10 to 20 news releases that nobody cares about right now, and which the market doesn't really reflect. A lot of work at Berna, which is now the top spot. Anagulu, follow-up drilling, drill testing of anomalous zones from trenching and mapping. So they're going to be testing the new idea that the light green rock is actually the main target. Tollerjimja, drill test strike extension. Cosolda, drill testing of best areas from surface geology. This is just, everything here is planned within this year. I would expect more really good results out of Berna. And that, according to the Kennerland study, and just based on common sense, obviously has a shot of becoming something really significant, maybe a multi-million ounce system. But that's obviously going to take time, but the more they learn, the better their targeting is going to be. And Agulu, again, if the new thesis proves to be true, let's say, if the quartzite diorite ends up being the main rock to focus on, this might get a totally new life. Tollerjimja, who knows, they might hit a sweet spot. Cosolda, we know there's a lot of very long soil anomalies. They also are set to acquire a second license in Eritirea, which gives them even more cans to kick. And look to acquire an exploration license in Saudi Arabia or Sudan. So again, we don't know what the actual news releases will be over the next 12, 24, 36 months. But what I think I do know is that there's considerable risks to the upside. And we know that one major discovery is surely enough if they're starting at a market cap of 40. I expect them to raise money soon. I hope so, because again, Alpha Exploration's problem is certainly not lack of targets or lack of things to do that have a positive expected value with money deployed. The more cash these guys have, the more aggressive they can be. So I hope they are able to raise a sturdy amount of money and literally be able to really test the thesis at Berna, the new thesis at Anagulu, see if they can find some better sweet spots of VMS mineralization at Tolejimia, and see if they can unlock this very large or these very large soil anomalies here. And again, if it wasn't for the quality of the team, this wouldn't be nearly as interesting. But here you have an active management team which is prioritizing bang for the buck. Last year, Anagulu was the main target. Now, with the really good results of Berna, that is the new highest priority target, which makes a lot of sense. And they have many more targets to go with. And why invest in Alpha? This is the pitch by the company. You can see led by a team that discovered and or developed Eritirea, Sudan, Eritrea, former general manager exploration for sub-Saharan resources, former president CEO of Nevsan Resources, which was a major success. Former president CEO of Sunrich Gold Corp, also a success. Former senior exploration manager for QMSD. I think that's Qatar something. And this is the Alpha Exploration Manager, which is obviously this company. 3 discoveries in just over 2 years. Again, this is to me, I think, it is still obviously a high risk, high reward story, but that's the whole thing. It's like, if you think there's 100% chance of the guarantee of success, this would be insanely cheap in that case, because it should already be pricing in 100% chance of finding a multi-million ounce gold system, or a very big porphyry system, or a massive VMS system, or more multi-million ounce gold systems at Cosolda, for example. It is not. It's the risk reward. What price am I paying? What chance of success do they have? What happens in case of success? How much will that be worth? So you have 40 million to start with. That's your what you pay to play. Then you have the come up with some probabilities of what chance of success is of finding something of significance. So if you have at least 4 targets, if you just make it easy, you divide it by 4, so that's 10 million priced in for each target. I would say that's low. And they've already shown, given how quickly they've had a lot of success and how quickly they had way above normal success at the Berna Gold target, for example. So this, it's a very liquid stock to begin with, but this is one, again, it's like, if you just, let's say you own shares right now, you threw away the key. In 2 years, I think you're either going to be up a lot or you're going to be down. If they make a significant discovery, this could be a multi-bagger. If they don't, you lose money. If they make a significant discovery out of any of those targets, maybe you'll get a 10-bagger. That's going to pay for a whole lot of companies that go to literally zero. But is there a guarantee? Absolutely not. But again, makes no sense. If you hold this for 1 month, it's with any good case. I have absolutely no idea what any stock is going to trade at in 1 month. Not even 6 months. But if you give a good company 2 years, I would bet the risks are to the upside. And that is mainly thanks to, or dictated by, the quality of the team, and obviously prospectiveness of the assets, etc. But typically a good management team picks prospective ground to begin with. So they are directly correlated. Yeah. Anyway, it's like I hope you got some uh, I don't know insights of how I think about the risk reward with exploration plays, etc. And I hope you understand why some exploration plays are much better than others. Even though it's like you can have a other early stage explorer with half the market cap, and that might be an alpha exploration might still be, I don't know, 300% better case, or even more than that. Even though yes, it has double the market cap, but the average junior doesn't have all the things that uh, alpha has. Certainly not the team, and that's the main attractiveness. And certainly not early stage results like alpha has had at a Berna, and certainly not a footprint like this, which is still open. Uh, Again, we don't need a 100% hit rate, that every success story becomes something of significance. We might need 20% hit rate or something like that. But the key is that if this is actually, I mean, again, it's like if you held if Great Bear, which turned out to be a major discovery, if you held that for 1 month, forget about that paying for it, or if you sold after the initial discovery pop, how on earth is that going to pay for like 10 to 20 other stories? You have to let a seed blossom or turn into a nice flower. That's how you pay for the other ones. So a success story can only pay for a lot of failures if you hold that long enough for them to create value. Because let's face it, let's say this is a major discovery, and in that case, just think that okay, they are gonna create 50% value or 100% value every year going for the next 5 years. Think of it like that. So if you sold after the first 100%, you're lacking. You miss out on the next 100% next year, and the next 100% year after that, and the next 100% after that. That's like as they say, cutting your flowers too early. Uh, because again, if this is a, let's say, plus 5 million ounce deposit at the end of the day in 5 years, we'll know that in 5 years, or maybe we'll know that earlier. But let's say it takes 5 years, and in that case, let's say it's worth $1 billion, above $1 billion. Then there's a lot of room to the upside. But they can't create that much value if you give them 6 months. In 6 months or a year, maybe they've created 100 million in value. So you get your double. But there's still 900 million value creation left. And obviously, the better it gets, the more margin of safety there will be. So it's like after you reach a certain critical threshold for success, the margin of safety will be more cemented, of course. If they find 1 million ounces, that's not really margin of safety. Perhaps if they go up to 3, then you know perhaps that, hey, this is a major mine. This is something, this is actually worth something. Some major mining company would want this. If it goes to 5 million ounces or more than that, that's great. But as soon as you reach the critical threshold for success, you know there's something of tangible value there. Then it just becomes, how much additional upside will there be? Because I don't see a story, let's say a exploration story, or one target goes to like, yeah, there's at least 3 million ounces here, and you think, I hope it goes to 5 million ounces. But let's say it doesn't go to 5 million ounces. It would still not be worthless if there's 3 million ounces there. But if you're starting from zero hope to go to 1 million, which would be the critical threshold for success, but you only find 500,000 ounces, that's not going to be developed, most probably. So that 500,000 thousand ounces of success doesn't translate into tangible margin of safety because nobody's going to pay for that. But if again you go from, let's say, 3 million ounces to 350 million, 3.50, 3.5 million ounces, you're already past the critical threshold for success. So even if you don't reach the 3.5, you're still at 3 million ounces, let's say, and that's probably gonna be worth much more than 40 million Canadian. Uh, you know, pre-dilution, excluding dilution. Yeah, so I think, I hope this will make sense, because I think it makes a lot of sense. And again, that's what, if there's anything I leave you with, it's like, ponder the ponder the importance of a good management team. How do you take advantage of a good management team? The only way to do that is give them time and money to create value. Whereas a poor management team, time is your friend. The longer you hold the stock, the higher likelihood that it is that you will actually lose money. And for a trader, it wouldn't really make a big difference because you're just trading some, share price swings. So you're not really taking advantage of the main value driver of a company, which would be the superior management team. So I think it's a total waste of time. Well, first of all, I think trading and short-term trading is almost, it's extremely hard. So I think that's a no-go to begin with from a risk-reward perspective, because everybody tries to trade and we know almost nobody makes any money. But still, when you talk to, when you listen to Rick Rule, etc., he's like, just bet on the best people who have done it before. And he has said it himself that if I only stuck to the serially successful guys, for some reason they find some way to make a success, at least uh, a lot more frequently than the average junior team, because otherwise you can't really explain how someone has, being serially successful, because the odds of that, if it was just luck is like, obviously very small. But to see someone that is top 1% of what he does, that's not luck, or they create their own luck at least. Yeah, I hope you got something out of this. This is not a better form type situation for me. This is, one of those that, let's say, have a 0.5 or 1% position in alpha. If this team does what they have done before, maybe that small position, or relatively small position, will actually turn into something significant. And who knows? I mean, if they, based on what happens over the next 12 months, let's say they have even more success here. Let's say it becomes increasingly probable that this is indeed a major discovery. Let's say price goes up 50% or 100. Maybe I'll even add. Maybe I'll press my bet because it's been de-risked more than price has gone up. So the risk reward is actually increased, although I'm paying up in price. Because that is also one thing, again, that I've harped on about before. I don't think you should just look. I mean, I see that all the time. I've seen that in Magna Mining. I saw that in Snowline. People immediately just, I don't want to chase. I'm not buying. I know somebody bought lower than me. I mean, that's really, envy and jealousy. And I mean, I'm affected by that too. But it should have no impact really what a stock has done. We're not investing backwards. If you had no position in a stock, it goes up 100%, but you think it should go up 300%, that's a major opportunity. And you would be dumb enough not to chase that, even if it goes up, has gone up 100%, which you totally missed. That's what I actually enjoy thinking about sometimes. It's like, let's say somebody have a position in a early stage explorer or a pre-discovery play. I have no position in that yet. They make a discovery. You see some guys like, yeah, nice. I have my X amount of shares. Maybe they had a 1% position. It goes up to 2%, and they're like, yeah, I'm gonna ride with my now 2% position, or I'm, like most people do, I'm selling half if it doubles, or they're down to maybe 1%, and I'm like, dude, uh, this just became a lot better than 100%, and you take a 5% position. So even though you weren't lucky enough to be in before the news and catch the 100% revaluation, you're probably still gonna make more money on that play than the guy who had his 100% pop, because he misplayed it after the 100% pop. So that's how you can, making lemonade out of lemons, or what the expression is. We don't care about what has happened. We care about how much risk adjusted money is still left at the table. I don't care if it's up 500%, 5%, down 50%, whatever. The only thing that matters is how much we're paying for something, what we think the future is going to look relative to what we're paying today. Yeah, thanks for listening. Consider me biased. I own shares of Alpha Exploration. The company is also a banner sponsor. So, I mean, if you want to learn more about the company, you should definitely email, or try to get on the phone with the company. I think they have. Well, I know they have the contact info. Here's the website: info@alphaexploration.com. Uh, Again, always best to hear it from the horse's mouth. Yeah, I like this story. Again, it's one of those balance of probability stories. Not no guarantee of success. It's just that I think it's still cheap relative the probabilities of success and what success could be worth. Uh, but it's not bet the farm type of play, because even if there's a 30% chance, which is kind of high, of you getting a multi-bagger, there's still a 70% chance that you will not. So yes, if you bet the farm and they do what they've done before, you can make a lot of money, obviously. But we're in it for the long term. We're in it, our portfolio, our goal is maximum long term gains, not just to get it quick soon, take, too much risk, etc., and blow yourself out. Yeah, thanks for listening. Do your own due diligence, not investing advice. Bye bye.